Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. A whirlwind of news here today. Positive news on Brexit. They're closing in on a deal. This ripped the British pound higher early on today. Solid New York Empire State Manufacturing kept the dollar firm, and then less worse, the German ZEW economic sentiment really was a reason just to kind of keep the euro buoyed above support. So first, let's talk about this pound. We broke out above last week's high. Last week's spike high, late last week, that was a trend line from 2018, kept the market consolidated, ultimately consolidated just below there, and now we rip through here. We're trading right above, right at 128. Headlines are going to drive this, just as it always has. But right now, the path of least resistance is open up to about 129.25, 129.40. You have a retracement level here. You have a low going back earlier this year before breaking down in April. So right there is a really good pocket to keep an eye on. Now that we're moving out of a trend line, at a bare minimum, we should be able to see about 129.30 in the British pound. But again, very headline-driven market. You have CPI data coming out of Britain tomorrow. Headlines are going to matter more. As for the euro, we're staying above that support we discussed in the FX Rundown written section yesterday. If you didn't get it, email us. We'll get it to you. The support there is held. And now we're moving up. Now, we really consolidated day of the euro, very confined, but we want to be sellers higher. So we have that sell target in that written report where we want to be selling the euro. Keep an eye on it. CPI coming out of the Eurozone tomorrow, some regional numbers early on. It's going to move it. Big number, though, tomorrow is going to be on retail sales. Retail sales is going to be crucial from the U.S. Today's New York Empire State Manufacturing data was really probably the only reason you're seeing the dollar hold so well on this Brexit possibilities. For now, though, we do want to be a buyer in the dollar, as we've been talking about here over the last several weeks. Let's face it, the dollar is in an uptrend. Pullbacks are buying opportunities the same way that rallies in the euro are sell opportunities. Now, obviously, the Brexit news could change things, but for now, we are staying that path, selling rallies in the euro, buying dips in the dollar. Now, one dip we don't want to buy is in the yen. The yen broke through major three-star support today, about 92.5. Path least resistance. Now, there's going to be some support. There's going to be different news drivers that are going to keep the market finding some ground here, but path least resistance really is down to 91 right now. Equity markets, the S&P is hugging 3,000. The NASDAQ, it's hitting our trendline resistance. If we get that next elevation level in stocks, there's no reason to think that the yen will go lower. You're seeing other safe havens break down today too. Treasuries following lower, gold pushing lower. So stay very cautious in the yen. We don't want to be sellers here. I mean, obviously just one headline on U.S. and China trade away from seeing safe havens rip higher. Treasuries, gold, yen. We talked about in the FX written section yesterday that we would rather be buyers of those other assets, not so much the yen in case of a safe haven need. Now, for the Aussie dollar, we're pushing below that support, and we do have our downside target around 67. It's on the FX Rundown written section there last night, but there's a level we talk about. It has to stay below in order to find that path of least resistance lower. But right now, this is another rollover here in the Aussie dollar. Very disappointing. And IMF downgraded their global growth forecast. 5.8% is China's GDP expectations for next year. That's really, really much lower than people want to see it, and any reason really to lift the Aussie. Remember, this is starting to fade out in the Aussie. What they ultimately need was better solid footing here on U.S. and China trade, or really a deal getting signed to get this thing and holding out above 68. It really just failed at resistance. And then lastly, looking at the Canadian dollar, there is that floor at 75. But we're back to this battleground area, 76. 76 is where we need to close out above. Particularly, we have those numbers on the FX Rundown, which you need to see, resistance 75.80, then above there. So we lay that landscape out. We are slightly bullish to Canadian. We're upbeat. CPI data coming out of Canada. The jobs data has been terrific out of Canada for now. It's one of the things that are really powering this thing off that floor of 75. But we need other pieces of data to also confirm it and help that. Housing data last week was a bright spot for the Canadian dollar, but energies is not. And we're seeing crude oil close on the lows here of the session, and we are bearish crude oil. So keep that in mind, but we are upbeat the Canadian dollar. Give us a call, though. We're here to help with anything on the board. 312-278-0500. You can check our website for updates. You can email us, info@bluelinefutures.com. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.